Okay, let's get right into it. For 2026, there is a major financial flashpoint building inside multi-generational homes. And you know what? It all comes down to one single question. Who gets to claim the grandkids on their taxes? Getting this wrong can be an expensive mess, so today, we're going to break down the exact IRS rules you absolutely need to know. First off, the stakes are way higher now. For 2026, the child tax credit is a full $2,200. For anyone, especially a senior on a fixed income, that's not just a little tax break, that's a serious financial boost that can really make a difference. And get this isn't some one-time deal. We're talking about a recurring credit for every single qualifying child, every single year. If you have 2 grandkids living with you, well, you do the math. That's a lot of money that adds up incredibly fast. But here is the big blinking warning sign. This is the trap. If that child's parent is also living under your roof and you both claim the child, boom, you could trigger an IRS notice. And that one piece of paper can freeze your entire refund for months. And it doesn't matter one bit who actually paid for the food or the rent. So how does this happen? Well, it all comes down to the core of the problem, the IRS tiebreaker rules. You can find them in Publication 501. These are the specific, rigid rules the IRS computer uses to decide who wins when 2 people claim the same kid. Let's just be perfectly clear and bust the biggest myth out there right now. So many people assume, hey, I pay for everything, so of course I get to claim the child. That assumption is dangerously wrong. In a shared home, the IRS gives the biological parent the default claim, period. It's that simple and that brutal. You see, the IRS computer follows this very strict 2-step process. Step 1 is what I call the biological trump card. If a parent lives in the house and files a claim, they just win. Game over. But if the parent agrees not to claim, then it moves to step 2, a purely mathematical test. The person with the higher adjusted gross income, the AGI, gets the claim. So what in the world is this AGI? Think of it as your total income before you take out the big deductions, like the standard deduction. It's the key number in this whole equation, and you can find it right there on line 11B of your Form 1040. So here's the bottom line, the one loophole you have. A grandparent can claim the credit, but only if 2 very strict things happen. 1, the parent has to agree not to claim the child. And 2, this is the part everyone misses, the grandparent's AGI must be higher than the parent's AGI. Not one or the other. Both have to be true. Let's look at a real-world example to make this crystal clear. Let's say a grandparent is living on a pension with an AGI of $25,000. Their adult child lives with them and works a job, earning an AGI of $30,000. In this case, the grandparent is completely locked out. Even if the parent agrees not to claim, the cold, hard math of the AGI test says no. The grandparent cannot legally claim that credit. Okay, now let's pivot to one of the most common and, frankly, most costly mistakes I see people make. It involves a very specific IRS form that is almost always misunderstood in a situation. It's called Form 8332. People ask me this all the time. Hey, can't my son or daughter just sign this Form 8332 to give me, the grandparent, the credit? We all live together. You know, it seems like it should work, but this is exactly where folks get into hot water with the IRS. The answer is a huge, emphatic no. Filing Form 8332 when you all live together is just plain wrong. It does nothing. Why? Because those tiebreaker rules we just went over, they are the final authority here. They completely supersede this form. The IRS computer will just ignore it. Here is the only time you should ever use this form. It's designed for one very specific scenario, to let a custodial parent release their claim to a non-custodial parent, but only when they live apart. If everyone is under the same roof, this form is completely irrelevant to your situation. And here's another critical detail that gets lost in the shuffle. Even when you use Form 8332 correctly, it doesn't transfer everything. It basically unbundles the tax benefits. All it does is transfer the child tax credit. The custodial parent still keeps the right to file as head of household and claim the very valuable earned income tax credit. But here's a little power move for you. What if you signed one of these forms years ago, maybe for a non-custodial parent who isn't really in the picture anymore? Are you stuck? Nope. You can take that claim back. Using Part 3 of the form, you can officially revoke that release and reclaim that full credit for yourself in future tax years. So how do you protect yourself from this audit nightmare and make sure the credit actually goes where it's supposed to? Well, it all comes down to a simple 3-step system that you have to follow before anyone even thinks about filing their tax return. Here it is, your 3-step pre-filing checklist. Step 1, before anyone touches a tax form, do the AGI pre-check. Compare the parent's AGI to the grandparents and see who is even eligible based on the math. Step 2, have the family conversation. Based on the rules, you have to decide and agree on who the rightful claimant is. This avoids a fight with the IRS. And finally, step 3, document residency. Keep a simple calendar or log showing the child lived with you for more than half the year. That's your proof if the IRS ever comes knocking. And remember why this all matters so much. Trying to be the first one to file your taxes is a terrible strategy. It's a race where everybody loses. It's what triggers that CP87A notice, freezes the refund, and just creates a massive bureaucratic headache for the whole family. Communication before filing is literally the only way to win. So I'll leave you with this final thought. The IRS rules are based on cold, hard math. They're not based on who pays the bills or who loves the child more. So the real crucial question you have to ask is this: are you and your family actually prepared to have that direct and maybe a little awkward conversation about AGI before you file?